On Tech News Today, T-Mobile and Twitter announced earnings yesterday. Both companies exceeded expectations for user growth, but Wall Street is unimpressed. We will tell you why. Plus, EMC and Microsoft offer powerful new enterprise cloud goodies, and wait until you hear about the new Motorola Droid. It's all coming up right now on Tech News Today.
This is Twit.
Bandwidth for Tech News Today is provided by CashFly at CACHEFLY.com.
This is Tech News Today for Tuesday, October 28th, 2014. This episode is brought to you by Braintree. If you're a developer or manager of a mobile app and searching for the right payments API, check out the new One-Touch product by Braintree, the fastest, easiest, most secure way to pay in-app. To learn more and for your first $50,000 in transactions fee-free, go to BraintreePayments.com/twit. Tech News Today is the show where we talk about the tech news with the journalists who report it. Welcome to the show. Anthony, thank you so much for sitting in. How are you doing today?
I'm good. How are you?
I'm doing fantastic.
Awesome.
Now, you said you were going to go on a diet yesterday, and then I brought those those delicious treats from Jordan, and I think I screwed everything up there. Yeah.
Starting today.
Yeah, if anybody needs to go on a diet, it's me, believe me. So, and Joe Panettieri, it is Tuesday, and we were talking before the show began about how you always bring the big, heavy iron news with you every time you come on the show on Tuesday. Really appreciate that.
No problem. I think you were mentioning that a lot of the enterprise news tends to break on Tuesday, and you're exactly right. So yeah, we're packing some iron today.
My theory is that the bigwig execs at these huge enterprise companies, they don't want to work over the weekend. They don't want anything interrupting their golf, and so they make sure they have Monday to get those slides, finished, and then they launch it on Tuesday, and then they have the rest of the week to sort of deal with the aftermath of the announcement, and then Saturday comes around and they're back to the country club.
I have a similar conspiracy theory, and mine goes something like this. You are exactly right. They're at the country club all weekend. However, the reason they don't do news on Monday is because they spent the entire weekend negotiating mergers that never happen, and the deals fall through, and then they announce their actual news on Tuesdays.
They announce whatever it is they have left by Tuesday. Right. All right. Well, that's a good theory. I like that one. Let's go with yours. And let's jump right into the news. T-Mobile announced earnings yesterday, and they gained more customers and less money than expected. Marina Lopes covers the telecom industry for Reuters and joins us right now. Welcome to you, Marina Lopes.
Thank you so much. Happy to be here.
So glad you're here. Now, T-Mobile's third quarter subscriber growth and their projected growth for the year seemed really good to me. It seemed really, really good, especially after years of losing subscribers. Can you tell us more about their subscriber growth and how they managed to do it?
That's exactly right. They keep blowing everyone away with their subscriber additions. They added over 1 million contract subscribers this quarter. It was their best quarter in terms of growth in the company's history. So customers are really attracted to some of their promotions. They have no contracts, simpler pricing. You can bring your own device. And this is all fantastic for bringing in customers, but it's not so great for profitability and margin.
Yeah, that was going to be my next question. So they're growing like crazy, but what are they doing about their bottom line? Do you see a path to profitability, or is it really about growth, even growth with losses at this point?
At this point, it's all about growth, and this is nothing new for T-Mobile. They seem to have this curse where they can bring in lots of customers, but they're seeing limited profitability. And for some investors, that's not a problem, but things are going to get more difficult. We see Sprint, which has been, relatively asleep for the past few quarters because of a very messy network overhaul. They're starting to pick up pace, and a lot of the other carriers are also starting to cut their prices. So they are seeing more competition, and that's only going to get worse as we get into the holiday season.
It seems to me that T-Mobile is really kind of, obviously their CEO makes a big deal out of being a sort of a maverick or whatever, and he always wears the pink T-shirt, stuff like that. But are they really shaking up the industry as they say they are? Is the industry following them with some of the innovative plans that they've come out with, or is that just a lot of spin on their part?
I would say they actually have shaken up the industry quite a bit. they eliminated contracts, and a lot of the other carriers follow that and kind of restructured the entire way they price plans now. They've unbundled the cost of service from the cost of devices, and that's something that all four of the major carriers have done at this point. So it seems like everything they launch, the other carriers are quick to jump in and do as well. But at this point, what else can they do? They have cut prices substantially, and it's starting to eat into some of their profitability. So it remains to be seen whether other carriers can, keep up at this pace.
Hey, Marina, what about T-Mobile and their enterprise focus versus their consumer focus? Are there any clues here in terms of how they're doing on the business sort of enterprise customer side versus consumers and families?
On the enterprise side, it's all about changing the perception of T-Mobile. A lot of companies don't take T-Mobile very seriously because their network has been a little spotty in the past. And so that's something they're definitely trying to do now, change the perception that this is a network that you can depend on and you can put your business on. And some of that, they've been trying to attract some enterprise customers with their international roaming. You can roam internationally for free and different offerings like that. But there's still a lot that needs to be done. Most companies just don't trust the network to be reliable for what they need when you actually put it on the line.
Now, of course, Wall Street was unimpressed with their earnings report. As someone who covers the telecom industry, do you have a sense that in the bigger picture, larger scheme of things, whatever the cliche is, are they succeeding or are they failing?
Well, I think something you always have to take into account with T-Mobile is that they're a company that has been looking to be sold, right? Their parent company, Deutsche Telekom, has entertained a series of potential buyers. None of them have materialized. And so for the first time, I think investors are looking at this company as a company that could potentially stand on its own. And that's a very different view than they've had in the past. And Deutsche Telekom itself has said, potentially we can just keep T-Mobile as a standalone business. So that's something investors are looking at, and something the parent company is looking at as well.
Marina Lopes writes at Reuters.com, and you can follow her on Twitter at Marina Lopes. That's Lopes with an S at the end, not a Z. That's Marina Lopes 331. Go ahead and follow her there. Thank you so much for joining us, Marina.
Thank you so much.
All right. Well, in just a sec, we're going to tell you about that big enterprise news that we hinted at earlier. But first, I want to tell you about Braintree. We talk a lot on this show because there's so much news about it, about payments. And if you're an app developer, you have to get payments right. And of course, if you're a ordinary user of different services, you have used Braintree, one of our sponsors, many times. For example, Braintree's API is used by Uber, Airbnb, Hotel Tonight, Living Social, GitHub, a bunch of major companies in the industry that have seamless, secure payment solutions that you probably have used many, many times. And there's a great reason why those companies use Braintree, because it gives you a full stack payment solution. Support for all payment types your customers might want: credit cards, debit cards, PayPal, Venmo, even Bitcoin, and of course, Apple Pay. Yeah, they can take money in 130 currencies, so you don't have to worry about the currencies. Just use Braintree, and you will be able to take money from just about anyone across all platforms. They have fraud protection and customer service, one-touch payments for your mobile app. Just build it in, only 10 lines of in-app code. This is really slim. It's very low footprint, and you'll be able to instantly take payments for your products, your services, whatever it is that's in your mobile app. It has best-in-class customer service. If you have a question or a problem, Braintree will always give you a live person to talk to who knows what they're talking about. And it's the most secure way to pay. We're always talking on this show about all these hacks and security nightmares. Braintree is known for their back-end security and merchant protection. You never have to worry about fraud if you ever get hacked. Braintree will cover you. They use tokens to secure payment. So all the best payment solutions use tokens. That's the only way to do it. And so users' credit cards information isn't passed to the merchant server. Braintree is the fastest, easiest, and most secure way to pay. So if you're an app developer or manager, check out Braintree today at braintreepayments.com/twit. Check out their documentation. It's simple and concise. Play around in their sandbox. Give Braintree a try with no commitment, and to test your integration before going to production. Once you decide to implement One Touch, your first $50,000 in transactions are fee-free. That's braintreepayments.com/twit. And if you ever use Airbnb, Uber, Hotel Tonight, Living Social, Fab, or GitHub, let them know what you think about Braintree. Just tweet it on Twitter and copy at Braintree so they'll see it. And we thank Braintree for their support of Tech News Today. Well, Joe, it looks like EMC had some really huge announcements today.
Yeah, I think what EMC did is they strung together 3 singles, and that is now a scoring rally, so to speak. So what EMC's done here is they were expected to buy one cloud company, and the rumors have been around for weeks, and that deal finally happened today. But in addition to that one deal, they bought 2 other companies. And what we're really seeing here, Mike, is for lack of a better term, sort of a soap opera unfolding here in the enterprise space, where a lot of shareholders have been pressuring EMC to maybe break itself up. And instead of being a seller and maybe even merging with Hewlett-Packard's enterprise group, EMC is now a buyer. And they are really trying to roll up really quickly here a hybrid cloud strategy that spans all sorts of new tools and technologies that they acquired today.
Yeah, the companies are Cloud Scaling, which is an OpenStack-based software for hybrid cloud deployments. Can you talk a little bit about what a hybrid cloud deployment is exactly?
Yeah, so the cloud scaling play, that acquisition is pretty interesting in that, like you mentioned, it's an OpenStack company. And OpenStack today, if you're going to think about it, it's very similar to Linux back in the late 1990s. A lot of different companies in the late 1990s introduced Linux distributions, such as Red Hat, such as SUSE Linux, et cetera, and Caldera, for instance. So a long list of Linux companies way back when. Now we're seeing a whole bunch of OpenStack distributions. That means all these sort of cloud software packages from different vendors. Hopefully they're interoperable. And so EMC is going to have one. Red Hat has their version. Hewlett-Packard has their old version, and the list goes on. Cisco just bought an OpenStack company a few weeks ago. The hybrid strategy here goes something like this. If I'm an enterprise and I use OpenStack on premises, hopefully then I can build my own private cloud. But even better, if I want to move those workloads out into a public cloud, I can then go to an OpenStack public cloud and move my workloads out there. So hopefully you get the best of both worlds. Either I keep it private or move it public. And in theory, it'll be drag and drop to move my workloads between each of those areas.
So a second company was Maginatics. I think I'm pronouncing that right, Maginatics? They enable data movement with data deduplication. So this is a secure and reliable way, they say, to just deal with all this kind of cloud movement of data and applications around on these various cloud implementations. Are you familiar with this company? I mean, I'd never heard much about them until this acquisition.
Yeah, this is the piece of the 3-legged stool that I was not familiar with. And I think as I was researching this ahead of the show, I think what it does is it plays to EMC's strong area and strengthens the strong hand they already have in storage. So since EMC is already dominant in the on-premises storages market, and EMC very quietly is a leading provider into public cloud storage systems. Now, this is sort of the icing on the cake that really strengthens that hand.
And the third company is Spanning, which is a backup and recovery tool for, company for cloud-first apps. The bottom line, I guess, Joe, I guess the question I would have about these acquisitions, and also they announced a bunch of services around these various things. What is the takeaway very quickly for people who are consuming this news and who maybe not entirely familiar with all these companies they're acquiring? What does this represent for EMC in terms of where they're going?
Yeah, I think there's a few answers there. For our viewers and listeners who are already in the enterprise space and really focused on that, you're seeing EMC try to continue with its on-premises heritage and then extend its software and its capabilities out to not only its own cloud technologies, but third-party clouds. So the whole idea is you'll be able to build an on-premises cloud, but then interact with third-party clouds such as Amazon, such as Microsoft Azure. So that's for the traditional enterprise guy. But then I'm sure we have listeners and viewers who are growing up more in the born in the cloud space. These listeners and viewers probably are Google Apps users, are Microsoft Office 365 users. In some cases, those are commodity services, right? Low-cost services. What EMC is trying to do here is wrap higher-end, more sophisticated services around that to protect those implementations. So, for instance, here on the show, we use Google Apps. If that were to ever go down, maybe EMC has a solution that will protect our information and make sure that there's some sort of redundancy built in over and above what Google's offering.
And hopefully enable us to do the show while it's down. It has gone down right when we've been trying to do the show, and it is not a pleasant situation, I can tell you.
No.
Well, in other news, more consumery, Verizon and Motorola today officially announced the heavily rumored and leaked Droid Turbo, a huge phone with a big battery that's supposed to get 48 hours of usage. That battery. The phone was teased this week in a weird amateurish video featuring actor James Franco. The phone has a 5.2-inch Quad HD display protected by Gorilla Glass 3, and it's got a Kevlar back. So basically, if you get shot, you want this thing in your pocket to save you from that bullet. And it's powered by a Qualcomm Snapdragon 805 chip. It's got a 21-megapixel camera that shoots 4K video. Sounds pretty cool. The phone will be exclusive to Verizon for some reason, shipping Thursday for $199 with a 2-year contract or $25 a month with Verizon's Edge early upgrade program. This sounds like a pretty cool phone, Joe Panettieri, but I just don't understand why they keep, do these one carrier releases. It just doesn't make any sense.
That was going to be my question to you. I thought the days of a one carrier release were over. And as we've seen with the Amazon Fire phone, it's a fire sale over there with the one carrier approach initially over there. So I'm always nervous when you're tied to one platform. But I was giggling just a little bit when you said there was a weird video featuring James Franco.
Is there any other kind?
Exactly.
Yeah, he's riding around on a bicycle, and he's like, wow, he's really fast at riding the bicycle. It's like totally bizarre video, but yeah, I guess, here we are playing it and giving them, rewarding them for their weirdness. Well, Joe, it looks like Microsoft's got a whole bunch of cloud and other announcements as well at Microsoft TechEd Europe.
Yeah, TechEd Europe. A lot of news coming out of there today. And I think we're seeing some key themes emerge. Number one is this. On the one hand, they are very, very committed to Windows 10 without a doubt. But on the other hand, we continue to see Microsoft announcing product extensions and services without the Windows brand on them. A lot of new Azure offerings. And again, it used to be Windows Azure. Windows Intune, the name has changed to just Intune and some enhancements there. And I think the biggest news here has to do with basically going back to Microsoft's strength. If you think about Microsoft's strength in the early years, Mike, the customer was not the end customer. The customer really was the third-party software developer, the ISVs, the independent software developers. What we're seeing, the big news out of TechEd, Mike, is the fact that Microsoft is opening up the Office 365 cloud platform to third-party developers so that now they can write apps and extensions to that platform and maybe get an ISV ecosystem going there.
Yeah, their new open APIs for Microsoft 365 sound really awesome, and also their new mobile software development kits for native app development. It sounds like, as you go across their enterprise and business portfolio, they've got a lot of APIs, they've got a lot of automation software, a lot of basically great tools if they work as advertised for managing clouds, for managing mobile users, for managing all kinds of Office applications and so on. So it's just a whole lot of stuff, and this is kind of I guess it's a typical Microsoft style of announcing things. They've got probably 100 or so. I'm just making that number up, but it's many, many dozens of individual tools and features and services that basically make everything more powerful and more automated and more manageable.
Yeah, and mostly cloud, right? Mostly cloud related. And what's interesting there is there's so little Windows related branding and or news around that area. Yes, they announced some new Windows 10 features, including a trackpad gesture support, which reinforces the fact that Windows 10 won't just be for touch users. It'll be for the traditional PC user as well. But the far bigger news here, every announcement they're making has to do with some sort of cloud extension and or new cloud capability, and you don't see the Windows name anywhere. And I really like that. I like that approach. That's their fast-growing business, and they're basically saying, yeah, sure, we're committed to Windows, but that doesn't mean we're going to lead with Windows. They're leading with a mobile and cloud-first strategy. And oh, by the way, sure, Windows 10 will be out next year as well.
I think that you mentioned the Mac-like trackpad gestures. I think this is an interesting moment in as a interface junkie myself. I think it's interesting that Microsoft is essentially surrendered in the war over what the correct gestures should be for trackpads and for touchscreens, and essentially given it to Apple. Microsoft Research has been developing gestures for 20 years. I mean, they've been really at the forefront of developing the sort of the user interface gestures for multi-touch And of course, they own the two biggest companies for big screen multi-touch, and they've got all kinds of really cool gestures that combine pen and touch that really should be in products that we all use, but they're not. But here they're essentially just jumping on board with the Mac gestures, which are a little weird. When Apple rolled out the current trackpad gestures, everybody's like, wait a minute, this is kind of backwards. This doesn't make any sense. And then we've all been kind of bludgeoned into accepting them. It's like the QWERTY keyboard. They're weird, but like now that we use them all the time, they're sort of like become normal for us. But Microsoft has jumped on board. They're not fighting it. They're saying, okay, these are the gestures. So with Microsoft and Mac and Apple both using the same basic vocabulary of gestures for a trackpad, that's it. Everybody else is going to support that too. That's the standard now.
I think that's one key point there. And I think the other interesting thing is what Microsoft is not announcing here. You know, I saw a research report today. I apologize, I don't have it at my fingertips, but I saw a research report talking a little bit about how touch is not the new battlefield. The touch battlefield is over. The next battlefield is voice, and also all sorts of biometrics recognition. And so it's almost like Microsoft is saying, hey, you know what? We surrender. We know these user interface standards have been set. And very quietly, I'm sure Microsoft R&D is working on the next round of user interface wars.
Absolutely, and they've got some great technology for voice and all the rest as well. So it's going to be an interesting 5 years ahead of us. Well, we've been telling you about the secretive augmented reality startup Magic Leap, which Google recently invested in a big way. Now, TechCrunch's Steve O'Heir has discovered some interesting information based on the company's job openings. Steve is joining us now by phone to talk about it. Welcome to you, Steve O'Heir.
Hey, thanks for having me.
And thanks for hanging on. It's we're running later than we expected to, so I appreciate you hanging on. Now, first of all, what did we previously know before these job openings about Magic Leap's technology and their forthcoming products?
So, in a way, not a lot, except for that it's some kind of wearable device described by the CEO of lightweight wearable. So maybe something that isn't as bulky as, say, the Oculus Rift, but more towards maybe do with us, and it combines software and hardware to, in theory, do augmented or virtual reality, so placing virtual objects in a real world-like experience better than previous tech. But as I say, nobody really knows publicly what this device entails.
What do we know about the type of talent they're looking for to deliver this device?
Well, it's interesting because there's like 62 openings in total listed on their jobs page, and from that we can decipher a number of things. Maybe surprisingly, but maybe unsurprisingly, it looks like the platform on the software side is built on Google's Android open source project. There's quite a few listings that make mention of Android with specific titles such as Android Developer and Android Core Software Engineering. And basically lots of the listings mention the need for Android experience. And then on the 3D rendering side, it looks like the platform uses Unity 3D. So again, pretty ordinary tech on that side. So then it sort of begs the question, okay, where is the magic in Magic Leap, as it were, that's created such a huge amount of funding and hype? And that looks to be in the hardware, specifically solving that really unsolved problem of, as I said earlier, how to get virtual objects to actually appear in your eye line as if they really do sit in the real world, as it were.
And they use lasers for that, don't they? I should do the Dr. Evil like finger quote things, but they use lasers to essentially place virtual objects. Is that your understanding as well? And do these job openings hint at that?
Yeah, I mean, there's a lot of job openings that mention lasers, optics, and lenses. There's references to, machine vision and perception and machine learning. So, and eye tracking. So it looks like, none of us have seen, there is no public prototype. It looks like they're way off from a commercial launch, in my opinion. So a lot of it is conjecture and kind of quite controlled leaks and hints from the company itself, presumably to drive this recruitment, actually. But yeah, it looks like they're pretty keen on saying they've solved that problem of how to make as I say, virtual 3D, actually sit in your eye line using projection, we think onto your iris, so that like those objects actually appear, in the real world. That's the big hype, anyway.
Hey, Steve, I believe the co-founder and CEO over there is Ronnie Abovit. And now, do you have any background on Ronnie? And then has he made any announcement in terms of the types of talent he's recruiting to the company?
I mean, as far as I know, he's well thought of in the Florida tech scene. But that's also one of the issues, that the company's based in Florida, right? But it has some development now in Silicon Valley. And what I think is interesting is that, as far as I understand, a lot of the openings are still going to be in the Florida head office, and it does beg the question, can a company attract that kind of tech talent? Because some of these job listings are really quite, they look quite serious, like, machine learning and computer vision. They're very specialist roles, and attracting that talent to Florida, I think, might be an issue as well, despite the CEO having a good reputation and, this huge, over $500 million of funding, including backers like Google, and this is Google proper, not Google. So, but I think there's a slight, tension between that, the funding and the fact that they're based in Florida. No offense to Florida.
Well, I, for one, welcome our new augmented reality overlords. I can't wait to see what they come out with, and whenever they come out with it. Hopefully it'll be soon, maybe next year. Steve O'Hear writes at TechCrunch.com, and you can follow him on Twitter at Sohear. That's SOHEAR. Thanks for joining us from London late in the day. I really appreciate it, Steve. Really appreciate you joining us today.
No problem. You're welcome. Cheers.
All right. Bye-bye. Well, Joe, Twitter also had some earnings, and their earnings report were kind of similar to T-Mobile's. Why don't you tell us about that?
Yeah, it's interesting. Sometimes Wall Street earnings are all about managing expectations. Now, Mike, imagine if you ran a company and you grew your revenues more than 100% year over year during a particular quarter, and Wall Street was disappointed. I mean, that's basically what's happening over at Twitter, and the real focus is on the user-based growth or lack of growth. Basically, yesterday, Twitter came out with earnings, and they said, hey, you know what? The good news is Q3 revenue jumped more than 100%, but the share still fell about 10% because, again, that user base is not growing as quickly as investors would like.
I just don't understand why investors have to compare every social network to Facebook. Nobody's going to have the kind of users that Facebook does. Nobody's going to have the kind of revenue that Facebook does. Nobody's going to have a CEO that speaks Chinese. I mean, this is a really difficult situation that Twitter's in. They are unique. They are succeeding. They have really passionate users. They're making good money. They're innovating in lots of ways. I just don't understand why Wall Street is always disappointed in this company. They seem to be doing really well. And I also don't understand why Twitter ever even went public. I mean, maybe they need lots of money to deal with all this growth, but this is this kind of aggravation.
Yeah, the challenge with going public always is at some point you've got to pay back your venture capitalists and reward your venture capitalists. So of course you got to go public at some point. I think the challenge here is we live in a winner-take-all society. There was a great book about a decade ago about Oracle, and it was basically titled "Everyone Else Must Fail." And we've seen that trend over and over again. Look at Yahoo. Yahoo, by basic measures, is an incredibly successful company, but they're always trashed because they're not Google. And it's a difficult place to be number two, because when you're number two, particularly in the American economic environment, you're not number one, and that's what people know you for. And the other thing with Twitter, just getting back to some of the stats, we've done some analysis here at After Nines, and listen to these stats, Mike. We've got roughly 6,000 Twitter followers across our social media accounts. And then I would say our following on Facebook is probably 1/3 that, give or take. So we're pretty small overall, but again, 2,000 on Facebook, about 6,000 on Twitter. Yet our Facebook traffic is 2.5 times that of Twitter. So I think Wall Street, I think people like myself are taking a hard look at Twitter and saying, how much value are they delivering?
I think 6,000 Twitter followers is pretty darn good. I mean, you've been around for like, what, a month and a half, 2 months? Something
Yeah,
like that.
but I'm bending the numbers. Those followers include the bulk of which my own handle. So,
Okay, all right.
So yeah. After Nines is just getting started in terms of Twitter, but overall in terms of my own handle, the After Nines handle, and then same thing using that same approach over on Facebook, we see just how much more traffic is coming from Facebook.
Yeah, absolutely. Well, a TNT fan named Rob Brown sent us email about our Apple Pay coverage yesterday, and here's what he wrote. He said, I was surprised that in discussion of Apple Pay on TNT, no one, including Renee, who lives in Canada, stated that Apple Pay is not available in Canada. Renee actually stated that Canada is saturated with NFC. I believe he used the word dripping with NFC terminals, which people use with their tap-and-go credit cards. Regardless, with NFC so readily available, why is Apple Pay not available in Canada? And I have no idea. My guess is that they just have their hands full with lining up the financial services companies for the United States, and it's just a question of resources. But I'm just guessing. I mean, I think obviously it's coming to Canada. There's no question about that.
It'll be in Canada at some point, but hey, you know what? They can't even get it into U.S. drugstores right now. So I think Canada is probably a little bit lower on the list of priorities. No disrespect meant to Canada.
Yeah, absolutely. And it's also interesting about Apple Pay that we've learned recently, which is that you don't need to, as a retailer, to support it explicitly. You just need NFC, and people can use Apple Pay, but you need those financial services behind it. This is really a big deal between Apple and the financial services companies, and the retailers are just a sort of a dumb pipe, if you will, and that's one of the reasons why some of them in the United States are sort of rejecting it, turning off their NFC and doing other things that are sort of anti-Apple Pay movements. They just kind of feeling like they're getting locked out of the data. They're getting probably locked out of some of the revenue. What they are also getting, though, is they're getting more security because, of course, there's no data on the servers of the retailers that for the customers who are using Apple Pay. So we'll see it, and when it does come to Canada, we'll report it here. And again, I think that's it's inevitable that it will come to Canada. There's just no question about it. We've got lots of interesting follow-up stories about Apple. As you probably know, Apple discontinued the iPod Classic last month. Yesterday, Apple CEO Tim Cook said on stage at the WSJD Live event exactly why. They just can't get the parts for it anymore. I guess those creaky hard drives are hard to come by these days. We also learned that Apple spent a record amount on research and development, $1.7 billion in the last quarter alone and $6 billion in fiscal 2014, a 35% increase. That's probably the result of the fact that they're branching into new areas, some of which they've announced, like the Apple Watch, and some of which they haven't announced. We don't know what those are because they haven't announced them. And so anyway, that's a huge increase. That's a lot of money to be throwing at R&D for a company that makes, a tiny number of products. It's not like Samsung.
What's really interesting about that figure is there's so many tech companies right now that are being criticized for shareholder buybacks. Basically, all these tech companies are buying back their own shares, IBM being the poster child for this, rather than investing in R&D. So Apple's been under pressure to buy back its own shares from several shareholder activists, I would say. It's good to see Apple saying, you know what, we're going to plow it into R&D. And that creates jobs.
Yeah, absolutely. Well, Wells Fargo wants you to use Apple Pay so badly, they're willing to offer you a $20 credit to try it out. If you're willing to try it with a credit card, they'll give you a $10 credit if you use a debit or prepaid card. The offer expires at the end of November, unfortunately. Still, that's more than Whole Foods is offering. They're giving customers a $5 gift card for trying Apple Pay. But there's no need for them to try so hard. According to Tim Cook, Apple Pay is already the leader in contactless payments. He says that within 72 hours of the launch, Apple activated 1 million credit cards. Again, I should be doing a Dr. Evil thing on that. 1 million credit cards. That's pretty huge. And while Apple Pay is up, iTunes is down. Apple confirmed in a securities filing yesterday that iTunes music downloads are in decline. A reasonable assumption is that streaming services like Spotify and Pandora are eating away at those downloads. Well, our TNT fan of the day is Chuck Kelly in Alamosa, Colorado, who says he watches TNT every darn day while feeding his 4-month-old daughter, Esri. And there he is. And as she gets bigger, he's going to need a bigger screen. And that's Sarah doing the show last week. Well, how do you watch or listen to TNT? Just record a video or take a picture of your setup and post it on Google+, Twitter, or Facebook using the hashtag HowIWatchTNT, and we will find it. That is the tech news today. Joe, what's going on over at your new company these days besides getting a lot of traffic from Facebook?
Oh, there you go. I'll give you another teaser alert. So, I've been mentioning that we're up to something for later this year. We've actually announced the date. On November 4th, we're going to be announcing a new service. And a teaser alert on that service involves the fact that, here's a clue. I'm actually speaking with the CEO of Zimbra later today. And Zimbra's gone out and acquired about 2 or more companies in recent months. And we'll be interviewing him. And what will we do with that content? Maybe you'll find out about that and a whole lot more on November 4th.
Maybe we will. Is that a Tuesday by any chance?
It is a Tuesday, and it'll be at 9:01 p.m. Eastern.
Everything on your site is at 9:01.
Yes.
Something or other. Well, thank you so much, Joe. You are here every Tuesday, and it's great for you to be on the show and co-anchoring with us. Thanks again.
Thanks, and welcome back to the States. Good to have you back.
Thank you. Glad to be back. Well, you can subscribe to Tech News Today on Feedly or many other options. Just choose your favorite at twit.tv/TNT. You can follow us on Twitter at Tech News Today TV. Join our Google Plus community. Just search Google Plus for Tech News Today. And please send us your thoughts and opinions. Send email to TNT@twit.tv or leave voicemail at 260-TNT-SHOW. And don't miss our evening newscast, Tech News Tonight at 4 p.m. Pacific tonight and every weeknight right here on the Twit Network. My name is Mike Elgan. Thanks for tuning in. We'll see you tomorrow.